guys, I'm not going to do Whaletail in detail, but there are a few things which is different in this question to other questions that you've done, and I think that you should take note of those issues. The first thing is that property, plant and equipment. They give you property, plant and equipment. It is one figure, there's no breakdown. Also in the additional information, there's a breakdown of expenses, trade and other receivables, something about land, something about equipment, but only the carrying amount of equipment. And that is that. So nowhere in this question I have a proper breakdown between cost and accumulated depreciation. So therefore in this question as well, property, plant and equipment is going to be treated as one account. That is the one thing that you should look at. How do I do that? The second thing in this question that you should notice is that we have here rental income. Rental income being a separately disclosable item. So I'm going to show you how to disclose that item separately again. Then we have also an inventory write-down. So there is, you must make sure that you see that and know how to treat that in your statement of cash flow. And then we have credit losses written off as well as an allowance for credit losses adjustment. So make sure that you know exactly how to handle those items. And I think that is about that. So what I want from you in Whaletail is prepare the statement of cash flow. According to the direct method, your answer must be accompanied by the note reconciliation of profit before tax with cash generated by operations. Right, so let's start then with our first item, which is cash received from customers. We have our revenue figure for the year. So if we go to cash received from customers, let me just get there. It will be a revenue figure and then the movement in debtors. But in the movement in debtors, you must watch out for the following. They tell you here in the additional information, in the closing balance of trade and other receivables, is an amount of 15,000 in respect of the allowance for credit losses account. During the current year, the allowance for credit losses was created for the first time. Therefore, if you can remember under expenses, therefore the full 15,000 would have been accounted for as an expense. So we debited expenses and credited allowance for credit losses. Now that allowance account of 15,000 has already been deducted, obviously, because we show net trade receivables or net trade debtors in our statement of financial position. So in that figure, 15,000 was deducted. That figure, there was no allowance. So if we want to work out the movement in trade and other receivables, we have to add back that 15,000 Rand and then compare that to the 26,000 Rand. But there was also credit losses written off in the current year, no credit losses written off. If there was any credit losses written off in the current year, you had to adjust your outstanding balance at the end of the year with that amount as well. So therefore, watch out for credit losses and allowance for credit losses, and make sure that when you work out the movement in your debtors balance, that you're going to take that allowance account into account. And if there was an allowance or credit losses, you would have added it here as well and then get the movement. So your movement then was the difference between 26,000 and 34,000 Rand, which gives you 8,000 Rand. 19,000 plus 34,000, increase in trade debtors, which represents a cash outflow. So total cash receipts from customers, 3,403,800. Now, when we're going to work out our cash paid to employees, you might as well do your reconciliation note, because in this question, they do ask you the reconciliation note. So let's then start with the profit before tax, 108,200. It was given to you. You're going to add back non-cash flow items. Let's just have a look at our property, plant and equipment account. Property, plant and equipment, I've said we don't have a breakdown between cost and accumulated depreciation, therefore we're going to work with one account. So if you're going to go back to your statement of financial position, I'm going to have a look at property, plant and equipment. You will see there that we have an opening balance of 327,000 and a closing balance of 2,710,000. 3,272 and there's the closing balance of 2,710. Now, there's not many things that happen to property during the year. Plant and equipment, the whole caboose. Yeah, we had a revaluation reserve for the first time. So obviously we have revalued land with 500,000 and that should be accounted for in this combined account. If we had a revaluation reserve last year, the movement only would have been taken into account in our property, plant and equipment account. Then they also give us more information. They say land not being used was sold. It was originally bought for R1,000,000. Land is not appreciated, and there they also tell you that it was actually revalued. Here's the sold land of R1,000,000. They gave us the loss on the sale of the land here under expenses of 60,000 rand. Therefore, we can work out the proceeds on the sale of the land being 940,000 rand. The next thing that they tell us is the old equipment with a carrying amount of 70,000 was sold during the year. Additional equipment was required for replacement purposes. So that's 70,000 you're going to take out of your combined account. It will be transferred to asset disposal account, 70,000. They gave you a profit on the sale here of equipment of 12,000. So therefore our proceeds must have been 82,000, and obviously the proceeds will be recorded in the investment activity section. Great. So then we have accounted for all the equipment entries that they gave us. So that means that we need a balancing item on the debit side, and that will then represent our new property, plant and equipment. I think they said it was equipment that they've purchased to the value then of additions to property, plant and equipment, 648,000, which is your balancing figure there, 648,000. So that very quickly, property, plant and equipment. If they don't give you a breakdown between cost and accumulated depreciation, you do everything that you would have done in those two accounts into one account now. Further, there's no difference. Whether I'm working on one account or two accounts, my accounting entry stays exactly the same. Good. And then the last thing is then the loan. There you just have to put the additional loan separately so that you can work out how much was the repayment of the loan. This was straightforward. That was fairly straightforward. Oh, our separately disclosable item. If you go and have a look there, we had a rental income of 5,600 rand. When we actually calculated our cash received from customers, we only took our revenue figure, only our sales figure. When we have adjusted here for separately disclosable items, we have taken out the rental income there as 5,600 rand. So there's no accrued rental income, so therefore as a separately disclosable item, under the line cash generated from operations, you're going to show the 5,600 rand there. Go. I'm not going to give you the alternative because I see that some of you get very confused once we talk about alternatives. So I'm not going to give you alternatives. Do it this way. And then it's only one thing that you have to remember. Do it this way. Somewhere in the back of your mind, just store it that there is a different way of doing it as well. Great. Important in my non-cash flow items, you have to take out credit losses, the allowance of 15,000 rand, the expense side. Not the allowance account itself, it's the expense which was included in expenses. In other words, that 15,000. And then your inventory write-down, doesn't forget that, that is 30,000. When you work out the movement in inventory for the year, when we get to working capital changes, remember that you have to adjust your inventory figure, that figure of 1.5 million, with a write down, first you have to add the 30,000 and then compare it to last year's figure. They had a huge increase in inventory here. So 1.5 million plus 30,000 less 50,000 give you an increase, which represents a cash outflow of 1480. Here's the trade debtors that we've spoken about, trade creditors, and here we get cash generated from operations 193,000. So guys, that 193,000 equals that amount there. Let's cut it there. Cash generated from operations, note number 1. And now you can use this cash paid to suppliers and employees as the balancing figure. If I told you that you are not allowed to use it as a balancing figure, what would you have done? You would have taken the 193,000, you would have taken out revenue, because revenue 3,411,800, and then in this question you would have eliminated the trade debtors movement of 8,000. So you would have eliminated that. In other words, you would have added that back and you would have deducted the revenue figure of 3,411,800, and then you're back at cash paid to employees and customers. So focus on the differences. Make sure that you can do that. It's not a difficult question, but there's a number of principles involved here which you must be able to apply.